Well, hopefully you guys are watching this before 9:30 Eastern Time. Cue the fire, and if you're not, you're probably okay. This whole economy and the way the stock market is going, you have plenty of time, especially when people like this cat, Michael Burry. I know that's not Michael Burry, but he filmed him in the movie. That would be Christian Bale. Cue the fire. I always say, I'm like, did I miss that? But he's saying disaster. All right. The Fed is saying you will experience the pain. So any way you look at this, I think you are caught. Ooh, wow. That's fire. You're caught between a rock and a hard place. Nowhere to run. Also in this video, I'm going to pull back the curtain and show you the Fed isn't in control. And they weren't in control last time. And so if I do my math right, if they weren't in control last time, they won't be in control this next time. And if you wanted to know why the stock market went up, well, that's because we added about $10 trillion, give or take 20 trillion. And some people like to call that sugar or cocaine or whatever, or sugar babies or sugar two babies. The Big Short. Yes. Any way you look at it, the stimulus. Everyone, you all get free money. Now, us macro guys on the other side, or traders, depends on how you want to look at this. How you look at it is like, whoa, wow, this isn't going to end well. And looking at the markets, it looks like it's already started. S&P down, that was Friday, 3.5. Dow over 3. NASDAQ pulls in a 4, and after hours, let's keep this fire a-burning. But the truth is, as this article says, Big Short investor Michael Burry says the U.S. government is backstopping markets and the economy. Well, they did, but now it's run out. Well, that is until they do it again. So I guess we just have to hold our breath. But like with all economies, you do have a thing called burnout, see? Economies can burn out too, and they are. Friday, August 26th. That's almost a brand new story. But I'll show you what's not a new story is this. That's the only way you can do it. You tax the people. You have an economy, and then you tax people. Or you give them free stuff or bonds and have to pay that back with taxes too. And then everything just kind of grinds to a halt. And I've been saying this about when you're about U.S. federal debt to GDP at 80%, we're at 124%, it all just kind of ends. Well, except for this part right here that you have to pay back just $250,000. That's it, on top of what you already owe. Oh, that's a good one. Oh, and then the people that decide not to pay it, well, then you have to pay it for them. Student loan debt, whatever it is. Well, that is until what? You burn out. And that's kind of where we're at. Well, not yet. And in the markets, they call it capitulation. We're just like, everything's done. And I honestly don't think the government is done yet giving sugar babies. I think it's going to continue. Burry expects declines in consumer spending. Oh, well, that's already happening, which I'll show you. Economic growth? Nope. And inflation? Yep. And let me show you by charts basically what has happened. Here's your hourly earnings. Looks really good, right? That actually looked really great. Oh, that's when everyone could afford those big expensive cars. You walk into a car, right? New car, they're like, how much you make? Oh my gosh, I make a lot of money. Go ahead and check. And everyone had great money, right? Well, until they didn't. It's kind of like alcohol, right? You're like, oh my gosh, it feels so good. Everything's great. And the more great you feel, okay? I know, going out on a lake, and you can see the boats with the girls and the dudes, and then, you know, when they've reached a peak, they go from dancing and popping bottles, champagne, everything is great. And then it starts not looking so great on that boat when they're all over on the side of the, they're not looking for fish. I think they're feeding the fish. I actually saw that. It was disgusting. Also, for those of you who are like, no, bravo, the Fed's going to fix it. They'll just drop rates back down to 0. Everything will be great. That is not true. I circled it. I went back in the chart. Well, I mean, because I was trading this at the time. So I clearly remember exactly what happened. And we did get a boost right here. This is when they're like, rates to 0. And this was the Dow Jones Industrial Average. And we fell, I don't know, not very good at measuring. Okay. So we fell 14%. And then the Fed said zero, rates zero. And the market then lost 14, but it gained. We gained a whopping 6%. And then off to the races we went. You want to know what saved the market? It's right there. $3 trillion CARES Act passed. And then there was another 3 and another 3, $3 trillion here, $3 trillion there. The government goes, let's burr bonds, right? That's bonds go wild, which was a beautiful day in this neighborhood, right? It's all beautiful, well, until you have to pay it all back, which about this time last year, that's what you see above my head, that was when it was like, ah, shoot, guess it's kind of wearing off. And then if you guys follow Elliott Wave theory, I have that one on there. Sorry, I just things people say, and I chart it, I leave it up. That's a 5 to 10 year bear market if we break that. Fed, oh, hey, look, Fed taper, that worked out really well. And then we crossed that, and then off to the races we go. Falling below the 200-day moving average. But we come up and we hit our head. Why did we hit our head? Well, that's because of that falling wedge right there. LuxAlgo almost predicted it. It's there. It was a pretty clear falling wedge. LuxAlgo, link in the description if you want it. It's software, but then your price target was right there, and then we come down. So we're going to be experiencing the come down off the sugar high, which will probably take us to about where we started the sugar high. See where that circle is right there? The market's probably going to come down right in this zone here. Or actually, it was the start of the 200-day moving average right there. That's about where your price target is. But it's also not to say that we're going straight down in a straight line. No. We're going to have bounces, rallies, but we got to, we're coming off of, and I said this was the highest, one of the highest MACD convergences, divergence. You go back in the charts forever. Oh, you're going to pay a price on that falling wedge. Also, if you want to know how to do all this stuff, see, this is what smart people do. We look at charts. It's not 100%. It's as long as you're 51%, you win. It's like Vegas. You go in there, you spin the wheel. You got, what is it? Throw it on red, throw it on black. Well, Vegas, there's also 2 or 3 greens on there, so it's in their favor, not yours. And if you play long enough, you get to lose all of your money. But if you're interested in how to do this stuff, link in the description. Prices go up on all of my courses this weekend. So this is it. It's done. It's all, we're ramping up. Investors also ramp up. Bets against stock market as summer rally fizzles. Net shorting positions. Now, I need you guys to understand this. Net shorting positions against the S&P 500 futures have recently grown, reaching levels not seen in 2 years. Well, they're probably on, everyone runs to one side. And then you have a squeeze and the market pops. And that is why markets don't go up in a straight line. They don't go down in a straight line. Because everyone runs to one side. They're like, yeah. And then, oh, shoot, we got to cover. But yes, big picture over the long haul. We're heading down. And this guy right here will make sure that we do. I mean, they told you. They were very clear. Like when they exit and their friends exit and everyone takes the money and run, and then everyone on the other side is like, no, the Fed will save us. No, Jerome is not saving you. There is no more. Oh, also, if you could save this channel, hit the like button, please. Today, I refreshed the tubes and it was like, poof, 1,000 subscribers gone. So look, see if they've unsubscribed you. Dang it, the fight that I have against YouTube. Stocks face another sharp slide after Powell's hawkish pivot. It wasn't a hawkish pivot. He told you. Like, you've known about this. And guys, when it comes to their balance sheet, we just started. Like, give it some time. But yes, at some point it's gonna start doing that, and then you're gonna get a big line like that because everything is going to explode. And then the whole process will repeat. How is that, you ask? Here, I'll show you. I'll start you from the very beginning. But yeah, right now they're just letting the balance sheet run off. It's nothing. It's just bonds. It's called they're maturing. That's it. Short dated, not really long dated. But the process goes like this. Treasury writes down on a sheet of paper $100. Who's going to buy the $100, right? It's a bond. Oh, anyone? The Fed doesn't buy it. The Fed's not buying it now. They didn't buy it before. But wait, you see, everyone's always missing this one thing. They think, oh, they're buying the stock market. They're buying the bond market. No, they're not. And I'm walking through you step by step. I can't walk through you because I'm over here. So they write down $1,000 bond. Well, I'm just using that as an example. Who's going to buy it? The banks. The banks step in and they buy the bond. Oh, great. With whose money? Do the banks have money? Yeah, they have your money. So they take your money to buy the bond. Now, Bank of America has a $1,000 bond, gaining whatever percent interest that they're currently gaining. And then the Fed's like, hey, how about this? Put it on our balance sheet and we'll give you a reserve. And that reserve will pay you maybe a little bit more. And so then that bond just sits on the balance sheet and then it runs off. So that's how all of these shenanigans work. But in the end, what needs to happen is you need to receive a whole lot of money so this system continues, which is debt, perpetual debt with interest, and it just keeps going. Which, except right now, it's really not going too well, and the rest of the world. It's so complicated. So you have a rising dollar. That affects the rest of the world because they've decided to take out loans in the dollar, which loans and the banking system where 98% of the money comes from. You walk into a bank, say, I want a loan. Poof, just created whatever amount you just decided to borrow. But the rest of the world is borrowing using dollar-denominated loans. Those are going up. It cripples the world's economy. Our economy's going. We're all going. We all get to go down together. Well, that is until everyone runs to the bond market, causing yields to go down, and then it kind of fixes it. So everyone go buy bonds. I cannot tell you to do that because that would be financial advice. Do not go buy anything. We just paper trade on this channel. But hey, bonds are pretty darn cheap right now if you look back in history. And actually, stocks are kind of cheap if you go back in history. But I do believe they're going to be a heck of a lot cheaper. Only 5 this week. 5 S&P 500 stocks ended higher after Powell's sobering Jackson Hole speech. Just in case you wanted to know what one of those 5 were, Electronic Arts, EA, popped right above that 200. But it's, I wouldn't hold my breath on that one. It has been fighting to stay above that 200, well, for a while now. I mean, good swing trades, though. Woo! Look at that. See how everything swings. Swings up, swings down. Swings up and swings down. Kind of like Bitcoin, swinging down underneath that 200. And someone left a comment. I read all your comments. You're like, okay, good. We're at 19.9, just like you said, right? Crazy. Well, I'm going all in. Do not go all in. We're going lower. I told you, at paper trading, you can nibble. I said, this is where you nibble, was 20. You nibble at 20. You nibble at 15, 14. And me, all in at 4K. I will sell the wife, the dog, the kid. Yep. All of it. But that's the crazy thing about markets is so much of the time, you gotta wait. Everything is just waiting. You're, but Bravo, I want to trade right now. Well, that's why I give you a Bravo's daily watch list. But even in that, you guys are going to be suffering. Here, quote your article. Okay, New York Post. He's telling you pain. You're going to feel pain. Long bouts of pain. But while you're feeling the pain, ARCH, I cannot multitask. This was one of my Bravo's daily. Look at that. Oh, that was a swing trade above the 200. Look, you can keep your position open, taking profit. You were taking profit right at that. You can do 50%. Again, just paper trading money. Turn on Lux Algo. Here it is. Still, see, Bravo 9. You're still above it. And then after you make all of this paper trading money, you can go out and buy things like that. Get out there and go shopping, right? Because guess what? And I told you this too. Inventories pile up. I said that's what's going to happen. Why? Because I sell junk. And I even know like how much shipping, the containers, we can't put it anywhere. What are you going to do when you can't put all of this junk places? You gotta store it somewhere. Wow, 70% off clearance. 70% off. Like that. Regular price, but it's always up to, right? Up to. There's like one item in the whole thing, 70% off. Why don't you just do 100% off and then put one thing on there? Inventories pile up, uneasy shoppers put retailers in jeopardy. Dun, dun, dun. Chains have a glut of goods heading into big sales period, just as some shoppers are pulling back. Yes, because we don't want this kind of junk. This junk gets us in trouble. And why is that? Well, that's because it goes on your credit. You got to pay it back, and consumers are cutting back on spending. Wow, really? Didn't see that coming. But I do have a problem to fix all of this. Just give her money. Just give her more money. Throw money at her. She will take that money, and then she will go buy hats. I don't know. Those are, I don't know what that is. Shorts? I think they're pants. I don't know. Although I think it would be wiser if you learn how to make the stuff and sell it rather than being the person on the other end. Someone's always buying, someone's always selling. Try to be the one selling. I think you'll do better. Do things like passive income. Learn about these darn things that YouTubers that are my friends teach you about. And actually, shout out to one of my students. You emailed me. He's like, will you show, like, I'm like, yeah, all right, whatever. So this is one of the products. It's a sheet of paper, right? This, so you can put it on your, like, I don't know, you're gonna put it on your refrigerator. I think my wife would rip that one right off. But yeah, look, hey, double bottom. It's paper, falling wedge, rising wedge, bullet, right? You guys get it? And this is pretty new. And here's a little guide, get reviews. This has no reviews on it. Software I use, usually I have the link in the description. You want to know how much he's making? $900 and $450. So we just started, just launched, what is that, $1,400 a month? Okay, selling paper. And also just know, it's not easy. This is not selling junk paper. It's not easy. It's hard. I think trading's easy. I'm like, well, red line, click, buy, oh, click, sell. But at the end of the day, please do something. Oh, and yes, prices are going up within the next 24 hours. So take advantage of it, and I will see you tomorrow.